here with Brian Smith. This is Dave Downs again. Welcome back to your August compliance podcast with RASI. Brian, I hope I'm not the only one. I'm feeling a little bit in the dark, not in the dark, just confused and overwhelmed by all of the various programs. So my purpose here today is to try and just outline these in a simplified way, gain a little bit more insights in things that I hadn't even heard of yet before as we were putting the content together for this. We're going to review all the grants and credits that have been available over the last 18 months or so from the federal government and hopefully really gain some insight here. I appreciate your time. Welcome, Brian.
You bet. Thank you so much.
Let's start right out of the gate. Can you give me a quick rundown, recap of all the grants and credits and everything that's been available in 2020 and now in 2021, just so I can get a list on paper?
Absolutely. First, we got the PPP, Paycheck Protection Program. We have the first draw and the second draw. There's 2 rounds of the PPP. We also have EPSL, Emergency Paid Sick Leave. And don't forget the IRS and the government loves acronyms, so they're just full of them. After EPSL, we have ERTC, the Employee Retention Tax Credit, the RRF, the Restaurant Revitalization Fund, and then the SVOG, or Shuttered Venue Operations Grant.
Holy moly. The SVOG I hadn't even heard of until we were putting all the content together for this. I know we're going to get to that a little bit later, but that's the comprehensive. So we got PPP 1 and 2, EPSL, ERTC, RRF, SVOG. Appreciate that. Let's maybe kind of run down top to bottom here. Let's start with the first on the list, PPP. I know it was a popular thing. I know we really were on the forefront of helping put together the resources and reporting and everything last May when those launched. Anything new regarding forgiveness and what should clients know and be aware of?
Of course, there's something new. There's always something new. But recently there's been an update. The SBA has streamlined the forgiveness process for businesses with PPP loans of $150,000 or less. And, that might not sound like a whole lot, but loans of $150,000 or less account for 93% of the outstanding PPP loans that are out there. That means people haven't applied for forgiveness yet. So this impacts a whole lot of people, businesses, taxpayers, borrowers. The SBA also has launched a new application portal, which will allow borrowers to apply for forgiveness directly with the SBA instead of having to go through their lender. And this also may not sound like a big deal, but many smaller PPP lenders lack the technology and staff to develop efficient web-based loan forgiveness platforms to process the applications. So this will greatly help those smaller banks. I would say that the larger banks, Bank of America, banks like that, with their own forgiveness platform, will more than likely not opt into this. It's not required for banks, but if a bank doesn't have their own application platform, this would greatly assist them.
Interesting, and at least anecdotally, and maybe I could be told I'm wrong. It wouldn't be the first time. From our kind of experience, a lot of the smaller banks were the ones doing those PPP loans. It wasn't necessarily the Bank of Americas and the U.S. banks and the Wells Fargos that were really involved in that. At least from my experience in talking to folks, it was those smaller community banks that were doing the loans up front initially.
Absolutely. There were a lot of them.
Awesome. Okay. Let's kind of continue down the list. The EPSL, Emergency Paid Sick Leave. Are credits still available for employers on this program?
Yes, absolutely. The credits are still available to employers that choose to pay qualified paid sick leave wages. But paying sick leave wages is not required. The American Rescue Plan Act of 2021 extended the emergency paid sick leave through September 30th of 2021. But like I said, businesses are not required to pay that out. But if they do pay it out, they still will get a credit. A more recent change, the reason for eligible leave has been expanded to include obtaining or recovering from a COVID-19 immunization shot and accompanying an individual to obtain an immunization. Did I say that right?
So.
Get a shot related to COVID-19, that also qualifies as sick leave wages. So if you wanted to take your son or daughter to get their shot, you can get paid sick leave, and the business can get a tax credit.
Interesting. Is that only applicable for minors that you would be working, or it could be any family member, I suppose? It'd be really hard to track that.
Yeah, the law states that that individual means an immediate family member or someone who regularly lives in the employee's home. So if you had a roommate or something that you're not related to, more than likely that isn't really going to qualify, because you need to have a relationship that creates an expectation that the employee would care for that person. And I don't really think that someone you live with, your roommate. I know when I was, had roommates, I sure wasn't taking care of them. So just having a roommate and living with somebody doesn't qualify this. But if you're expected to take care of that person, that individual would qualify, and you could accompany them to get the shot and be paid sick leave, and your employer gets a tax credit. So it's a win-win-win.
Our last podcast was primarily on the employee retention tax credit and those kinds of things. Let's clarify any updates or any new changes, brief history of the ERTC. I know we spent a lot of time on that last month.
Yeah, just briefly, there's been a lot of changes with the ERTC, a lot of ups and downs. The ERTC was originally created by the CARES Act, which stands for, here's another acronym, the Coronavirus Aid, Relief, and Economic Security Act. And that was passed in 2020. And initially, PPP recipients were not allowed to claim the ERTC, but that was changed by the Consolidated Appropriations Act. So the Consolidated Appropriations Act also extended the ERTC through June of 2021. And then the ERTC was extended by the American Rescue Plan Act through the end of 2021. However, the infrastructure bill that everyone's been talking about, the Infrastructure Investment and Jobs Act, that bill could repeal that extension as a means to pay for a portion of the infrastructure bill. And what I'm seeing now is that for Q4, the ERTC may not be available for any businesses except what they're calling a recovery startup business.
This is a new wrinkle. Okay, so let's drill into that. You mentioned that recovery startup business. Give me some background on that. What does that entail? What does that mean? What's that look like?
Of course. So in Q3 and Q4 of 2021 only, just Q3 and Q4. Okay. A recovery startup business is an employer that is not otherwise eligible for the ERTC. They don't have that gross receipts reduction of more than 20%, and they're not under partial governmental shutdown to qualify for the ERTC. The business must have started after February 15th of 2020 and have an annualized gross receipts of $1 million or less.
Okay.
So, a business that started on, let's say, April of 2020 and had $2 million in 2020, well, that business is not going to qualify for the as a recovery startup business. They need to have an annualized gross receipts of $1 million or less. And that we're going to look at the entire time that the business was open. And you take, if they had 1 month, let's say they're open for 1 month and they had $100,000 in sales in 1 month. Well, on an average, if you annualize that, that's $1.2 million over a year. Sure. So that business would not qualify. So it's for smaller businesses, for sure.
Interesting. Okay. What are some of the main differences between the 2020 and now the 2021 ERTC calculations?
Those are the differences are vast. The 2021 is much more generous. But some of the main differences, for all wages paid to be eligible for ERTC, businesses with 100 full-time employees or less in 2020 qualify. So that means if I had 99 full-time employees in 2020, all wages that I pay to employees qualify for ERTC. If I had more than 100 full-time employees in 2020, the wages that qualify for the ERTC are only wages that I paid to an employee for not working. Okay, so
Okay.
not going to happen a lot, right? Who was getting paid not to work in the restaurant business? But in 2021, that number jumped up to 500 full-time employees. So very large businesses in 2021 are going to qualify for the ERTC. And remember, that's full-time employees. So if I'm not a full-time employee, I'm not counted towards that threshold. So if you had a bunch of part-time employees, they're not counted. Okay.
Okay.
In 2020, $10,000 of wages per employee for the entire year was eligible for the credit. In 2021, $10,000 in wages per employee per quarter
Wow. Okay.
are eligible. All right. So, 2-3 times the amount of wages. And if we're allowed in December to have the ERTC, a business could qualify up to $28,000 per employee for the ERTC for the entire year. And that is based on the credit increase. So in 2020, the credit was 50% of the wages. So the max was $10,000 per employee. The credit was 50%. The max credit you could get in 2020 was $5,000 per employee. In 2021, it's 70%. And remember, we have 4 quarters, so we could get $7,000 per quarter per employee, up to $28,000 a year.
Yeah. Okay.
So they made it much more generous in 2021.
Interesting. Okay, that's good. RRF has run out of money, right? So not much to update there. But for any restaurants that may have either already qualified for that, anything that they should know, any words of wisdom you would have for them, or what should they be thinking about and doing right now?
And just as a reminder, the covered period for the RRF, it began on February 15th, 2020. So a business could go back and say, we're going to use these expenses towards our grant. But there was a lot going on in 2020. We had the ERTC and PPP. So going back in time might not be the easiest thing to do to document these expenses for the RRF. But the covered period for the RRF does not end until March 11th, 2023.
Right.
So if a borrower or a business got an RRF grant and had a PPP loan and is eligible for the ERTC through most of 2021, well, they can start looking at expenses in 2022 to be paid with the RRF grant, and they don't have to worry about using those funds in 2021.
Interesting. Okay, and then so now we're kind of down to that bottom of the list. The new one for me, SVOG, as you called it, I think. Give us some highlights on this program and something that I'm getting educated on right now from the start.
Absolutely. The Shuttered Venue Operations Grant, it got off to a rocky start. But the kinks were worked out slowly. The portal was open late and it shut down immediately. And for nearly 3 weeks, people were waiting while the SBA did repairs and more testing. But finally, it was open at the end of April. And the SBA has actually just stopped accepting applications on August 20th. So this grant program went on for quite some time. And the grant program awarded a little over $9 billion to more than 11,300 businesses. So, it helped a whole lot of smaller venues. And, the SBA received more than 17,600 applications. Well over 14,000 of those were received in the first 60 days.
Wow. And
those applications represent, all 17,600 applications represent $13.3 billion in requested funding. So that's all the applicants. And that was $3 billion less than the total amount allotted. So we had a $16.25 billion allotted for the shuttered venue. And only $13.3 billion was requested. Of course, not all of those were awarded, so at the end of it, the SBA has only awarded $9 billion of that 16.25. So there's some money left over. And what that means, or what the SBA is doing about that, is they're planning a program for supplemental SVOGs. So someone that got a shuttered venue operation grant could perhaps get another one. This secondary grant could be 50% of the original amount, and the total amount that a business is allowed to get under the SVOG is $10 million, and that's with the original and the supplemental. So if you got the max $10 million the first time, you're not going to qualify for this supplemental. But the SBA is trying to get rid of all this extra money.
Good. Yeah. And if worse comes to worse, maybe it'll be reallocated into one of the other programs and be able to at least help the folks that still need a booster shot, so to speak.
Absolutely.
Super good information. What resources do you use, Brian? I know you're scrubbing everything every day. What resources do you use to help gather all of your information?
Well, the stats I just gave you on the SVOG, those were pretty specific, and that actually came from the SBA. They have what they call their Shuttered Venue Operators Grant Public Report. I pulled the one from August 23rd, has all these great stats. The SBA has great resources for SVOG, for PPP, and RRF. God, I can't even remember, there's so many. But the SBA is the best resource for that. And with the PPP, there's hundreds of resources on there on the SBA's website. My suggestion is to look at the PPP forgiveness application. That is a great document. Has all the rules consolidated into one document. And that's you would need to look at the full application, the 3508. But that PPP application has a lot of good information. Is where I get most of my information for the PPP. Cool. And then, the EPSL, Emergency Paid Sick Leave, and ERTC, it's the IRS. They have a great website guidance, and been putting out notices for 18 months now, changing everything.
If someone didn't want to just take your word for it and wanted to do their own rabbit hole research here, what other resources would you recommend for clients to help them learn and be knowledgeable about all these programs?
Well, RASI has a bunch of resources that cover all of these topics that we talked about today, but I would go look out at the SBA's website or IRS.
Perfect. Brian Smith, as always, massive wealth of information on all things government programs and funds and grants and these kinds of things. So I really appreciate your time today. Anything else we should know, or are we good to go?
I think we're good to go.
Brian Smith, thanks so much, man.
Yeah, until next month.
Cheers.
Take care.